Hello and namaste to all. Thanks for tuning to our channel. Today we would discuss on the market's performance and what can we expect for tomorrow given we have last weekly, monthly, quarterly and yearly expiry. After a sharp rally, investors appear to be booking profits, leading to a market pullback. Nifty is down by 182 points, roughly 0.77%, and Sensex is down by 728 points, around 0.93%. Indices which majorly took hit today is media, which was down by roughly around 2.4%, and oil and gas sector, which was again down by around 1.4%. Additionally, investors also remain cautious over potential US tariffs under President Donald Trump's administration. There seems to be lack of clarity that has fueled global market volatility. Now, any escalation in trade tensions could have a direct impact on Indian exports, particularly in sectors like IT and pharmaceuticals, which have significant exposure to the US market. Next is also quite important because India is totally dependent on oil imports and oil prices continuously is rising from straight 3 days. Now, crude oil prices are rising because there have been tightened restrictions on Venezuelan and Iranian oil exports. This has led to WTI and Brent crude to trade up by almost 1%. Last up is the US dollar index, which is strengthening, and a stronger dollar typically leads to foreign fund outflows from emerging markets like India, which is adding to market weakness. Again, higher bond yields make US assets more attractive to investors, leading to a shift in the global capital away from the emerging markets and putting additional pressure on our markets, which is leading to outflow of you know foreign funds and sell off in equities. So these are the major reasons we could see why there was typically a downfall that we had seen uh, to begin or emerge from today. Now let's move on to the charts and understand what it depicts and what actions should we take for tomorrow's weekly, monthly, or maybe year's last expiry. Okay, this is a daily chart of Nifty. So let's quickly see what has happened. So today there seems to be a clear rejection at this level. The markets opened flat or maybe slightly higher. However, immediately after that, we saw a selling pressure coming in. And this selling pressure continued throughout the day. So looking at the candle, it seems to be severe. Now, two major reasons. One is there was already a resistance. At this resistance, the indices or the markets could not sustain. And that is one reason why there was a profit booking seen. Secondly, with this kind of movement that we have had, a significant downfall, this could also lead to the starting of the uh, corrections that we could see for the further downtrend, or maybe it is coming back to fill this particular gap that we have had before the three sessions. Markets can retest at this level and then we could suddenly see a sharp rebound. So two scenarios could be possible tomorrow, and given the fact that it is the weekly expiry or maybe the year's last expiry on the NSE indices, so we are expected to have a volatile session tomorrow as well. And markets are at a crucial level here. uh, any candle which further continues the downfall pressure will lead to continuation of the rally, or if there is a rebound from here, we have to wait and watch what next is expected to happen in the markets. Now let's try and understand from the open interest perspective. So looking at the open interest, it is very evident that we have had lot of call additions at these levels. So there was a lot of pressure that was put from the call sellers, and there was a lot of additions that have been made in the open interest, which surely has put the resistance on the buyers. So we still see that there is a strong support that is held today as well. There was slightly recovery during the market hours, but then with the continued pressure, we saw the Nifty closed below 24,500 23,500 levels. However, tomorrow we have to wait and watch, because still at every 50 points or maybe 100 points, there seems to be a strong support available, and um, uh, put writers are holding these positions, and there was slightly additions that was also made. So seems difficult that the market can continue to fall. Maybe a gap down could something which would dent and give an upper hand to the uh, call writers. However, yes, this writing signifies that tomorrow, despite a buying momentum, it is very difficult to take out 23,600 levels and then 23,700 levels, because there seems to be a strong resistance that emerges at all these levels. Uh, but something noteworthy to make a point of is the PCR is zero point 0.8 overall, which is not that strong. So this could also be one of the reason for a weakness to be there tomorrow. But yes, given the fact that markets have been holding the 23,500 as strong, support, this support can continue to be held even tomorrow. Moving on to Sensex, Sensex has also given similar trend. However, Sensex seems to be more weak, though we just continued today after the expiry, weekly expiry of Sensex. The trend is intact, same as Nifty indices. There was a strong rejection at these resistance levels, and then market could not hold those levels, and we also saw a lot of sell off in the heavyweight stocks, which has led Sensex to come down from the previous high levels. Now we have to see if this levels could support here. We will surely see the gap being filled tomorrow. So after this gap, uh, can the market sustain these levels, or the market consolidates here for another 2 3 days, or market suddenly will open maybe low tomorrow and then come back in this zone, and then it might spend some time here before a breakout. So 2 to 3 scenarios can be expected: either consolidation at 77,500 to 78,000 levels, or a downfall to continue tomorrow, or a rebound above 78,000 levels. So let's try and understand from the open interest perspective. So on open interest, if we see at every 500 points, there is a good support that we are seeing from the put writers. At 77,000, we have huge additions that have been made in the puts. At 76,500, again, there is a good quantity of put additions that have happened, again at 76,000 levels. So these levels will act as a strong support for markets to sustain at every downfall that comes as a pressure from the call sellers. But yes, there have been equal additions on the uh, call writing side as well. So almost 50% of the additions has been made alone today. And yes, since this is the first day of weekly expiry for the 1st April, so that is when we are seeing a good additions. But yes, markets have a lot of support, and then the resistance would also be building up eventually when the market tries to touch at 78,000 levels. So we have to closely monitor again. uh, Sensex would not be so significant for us, at least from tomorrow's perspective, because the major focus would be on the Nifty 50 and all the other uh, indices trading on NSE, because of the weekly or the last weekly expiry for the financial year 2020 425. Next on is Nifty Bank. So there was a lot of strength that was seen in the banking stocks, which had fueled this entire rally of 6 7 odd sessions, taking all the resistances out, previous resistances out, and Bank Nifty have appeared to be very strong. However, it has covered this gap, and then from this gap levels we have seen a strong rejection coming in. Two straight big candles signifies that there is a selling pressure that is adding at the top on Bank Nifty indices. Now, what something closely that we have to watch for is during this high, majority of the top-notch banks like ICICI and then Kotak had made their all-time highs. So there definitely seems to be a strong buying momentum in those banks particularly. So in the coming weeks, we have to watch how those particular banks are expected to perform. That will have a direct correlation on the performance of the Bank Nifty index too. If there is a strong support and buying at the lower levels in all those banks, then we can expect that at these levels there would be a strong support that Bank Nifty could get, and then there could be a rebound from here. But it is not going to be easy, because at each levels now we would be having a lot of selling pressure that start to emerge. So let's see from open interest data what we can analyze. So on the Bank Nifty, there seems to be some bearishness and a lot of call additions that have had happened at the higher levels. So below 51,000 levels, there is no strong support that is expected to emerge. So tomorrow we have to see, with the fact that there is a expiry, there could be a sudden open interest that gets uh, added, maybe because of expiry, and to keep up this support, because if this support is taken down, then we will have a straight downfall uh, towards the 50,000 levels, right? And maybe I do not expect that it can emerge with a severe selling pressure, because there was a strong rally that we had seen for almost like a week, and definitely the put writers would be expecting to not let the pressure emerge from the call writers, and if that happens, then across the broader indices we would start to see having that impact, and then further sell off would continue to put pressure and take the overall markets down. So banking stocks definitely have been seeing a lot of strength. So this strength is expected to be kept tomorrow, at least until the expiry, and then we will have altogether a new April series. There we will have to see how the derivatives contracts will be positioned to understand where the market is expected, whether will it be heading towards all-time highs for Bank Nifty, or there would be a consolidation, and then post that we can see a rise further, or post the consolidation we can see a downfall too. So we'll wait and watch to see how the expiry is going to play out. And tomorrow's closing is going to be very crucial for all the indices, because that decides where the market is heading towards. Lastly, it is FINNIFTY index. Uh, like all the other indices, even FINNIFTY had seen lot of rejection at the 52-week high levels, and then from there on it emerged to have a lot of weakness. So in just two odd sessions, there was almost like 400 points drop in the Nifty index, which is roughly around like 1.5 to 2%, right? So this momentum, can we expect to continue and see a further downfall, or after this gap it could find some support and then rebound from here, or will tomorrow there be a consolidation that would happen, and then later the market can take support here and then bounce back. So let's wait and watch to understand how the market is expected to perform in the coming days to weeks. But yes, don't jump on to selling at these levels, because looking at the previous candles, it would evidently be expected that from here the downfall can slide and continue. But yes, due to a lot of buying that has happened from the FIIs at these levels, they would surely want to come back and add a lot of supports at each of the levels. If that sustains, then it is very difficult for the continuous downfall to happen. So we might see some bounce back eventually. But yeah, markets are at a crucial levels or trajectory, which would be a deciding factor for the next week and the coming weeks in the month of April, on how the performance is expected at each of the indices. So from the open interest perspective, this data on the call shorts very evidently shows that uh, despite there being a lot of put writers sitting quite tight here, they could not support the markets, and then call writers had taken more uh, weightage, and this is the reason why we had seen continuously from last 2 days there was around 400 points downfall in FinNifty. But yes, at every 200 points, we could see that there is a lot of put writers who are showing strength and support. Tomorrow we have to see, being the weekly expiry, how it is expected to play out. Will the put writers win ultimately, not letting the call writers to push for the sell off, or will call sellers emerge as a big strength and then take the markets down overall for tomorrow? So tomorrow's day again is going to be very crucial, and it is going to be a day where it becomes very clear for us as to what direction the market is heading towards, and what kind of trades that we should be taking to position ourselves uh, to take the advantage of the market movement. So this is going to be in one direction hereafter. Yeah, last up is on the DII and FII data. So Here on the index futures, FIIs have been short. So gradually they are cutting down their short positions is what each day we have been seeing. On the stock futures, they are long, and this long is being continued from last couple of days. On index options, on call options, they are long by 2.26 lakhs. At the same time, they are long on the put options too. So there is some indecision in the options data from the FIIs. So they are bullish as well as bearish. And there is just 32,000 quantities open interest difference between the call and put. So net there is an indecision. On the proprietary side, they are short again on the index futures and decisively long on stock futures. And on index, it is quite interesting to see that proprietary traders and FIIs have different views. So on call options, proprietary traders are short and they are also short on put options. So we could exactly see the opposite trades being taken by proprietary traders and FIIs. So whenever we see such kind of views or positions between these two major players, that is the day or maybe from those days we have to remain more cautious to see how the market is expected to trend and majority of the trend decider would be because of change in these data. So we have to be cautious and take trades uh, as per the trend. Now last up with the retail data, retailers are long on futures, index futures, and they are continuously being holding with their long positions on the stock futures. On the call options, retailers are short and they are also short on the put options. So I think last 2 days uh, the retailers would have made profits because they have been holding with their bearish view, and that would have helped at least for the option holders. But yes, stock futures holders and index long holders would have significantly seen the losses. Lastly, on the cash market, so DIIs have sold 700 crores and FIIs have continuously been buying the stocks, and they are long with 2,241 crores for today's investments. So as long as FIIs continue to pump in, and from last couple of days we have been noticing that majority of this cash investments are happening in the Nifty 50 stocks or maybe the you know high valued stocks or maybe large cap stocks is where a lot of money is getting pumped in. That is when we could see a swift recovery from the downfall that we had seen for a couple of days. So now it is a test mode for the FIIs as well as for the longs. If in the coming days they are expected to sustain with the sell-off that is coming from DIIs and maybe the proprietary traders. If that is sustained and controlled, then we could see further FIIs decisively taking the markets up, and then we will be in majority of the indices taking above the previous 52-week high, and then eventually the Nifty and Sensex indices are also expected then to catch up with the broader indices and move higher. So yes, this week is going to be crucial for the markets in terms of deciding as to what trend is expected to catch up in the coming days. That's it for today. Until tomorrow, happy trading and thank you for taking out time to watch our video.